So we've got our next presentation up. And, oh yeah, it looks like it's going to be Philippe from Cartier Resources on the Chimo Mine Project. You've already got gold outlined, a lot of gold outlined on this. And it's also a very interesting kind of land consolidation story to it too. So that, take it away.
Thank you very much. Thank you for your interest in staying here. Cautionary statements. Here's the hook. Our flagship property is a past producing mine. As you can see, first production was actually 1964, which is a very good year I was born. And so next year, 2024, will be a 60th year anniversary. What I have here is a graph of the price of gold in US and Canadian. And you can see where the past producing Chimo mine actually was operating in the 60s, 80s, and 90s, in an entirely different economic landscape, corporate landscape, and technological environment that we are currently in. We acquired the project in 2013, and 2016 had generated the thorough review and audit of the project. Presented that to Agnico. They bought in. They took 19% of our company, and the rest is history. In that green box that you could see there, we delivered 4 resource estimates, consolidated the ground, and also delivered a PEA. And now the price of gold is $2,000, and that's not, by the way, that's not the graph of our share price. So where and what is Chimo? So Chimo actually it started out by being a small project. It's that large landmass group that you see at the eastern end of the Cadillac Fault. So it's got a superb address, and you can see that the sheer size of it would cover the Val-d'Or mining camp and the Malartic mining camp that you can see further to the west. It sits along the Cadillac Fault, proximal to infrastructure and qualified workforce and all those mills that you see there. I did not put the shafts in because there would be quite a bit. Our fourth resource estimate pegged the asset at just under 2 or just over 2.3 million ounces, and our PEA ran a post-tax NPV of $388 million Canadian and an internal rate of return of 20.8%. So what I'm going to do for the rest of the presentation is basically dive down and show you what we've done with it and where we're going next. So that same land position, what I want you to see here on this slide is actually the outline of the original property. So by the third resource estimate, and after having discussed with several senior mining companies, it dawned on us that we had to purchase the surrounding group of properties. And that large property had been consolidated by Chalice Gold Mines and O3 Mining. And in fact, there had been exploration over a 60 to 70 year period where basically you could see all those drill indicated showings and deposits. We had only focused on about 25% of that. So the next slide will basically be a vertical slice through that tight grouping of red dots, all right? So there you have it. You have on the top part of the slide, you have a plan view showing a bunch of drill holes over a 60-year period. And at the bottom part, you have a vertical slice through the system. Keep in mind that that small property that I showed you in the previous slide, well, it basically was between those two lines there you could see at West Nordo and Chimo. So we could only focus on that immediate ground for about 5 years. And then it was quite obvious to us that it would extend east and west. But we didn't have access to that ground. So in 2022, we purchased 100% of that ground for about 50 million shares. And also, at that point, acquired a second major large shareholder, O3 Mining. So at that point, Agnico had 15 or 16%, and O3 had about 14 or 15%. And then you could see basically on this slide, an illustration I was talking about, that the system is known very well over 15 kilometers, but only drill tested at depth on the part that was a past producer. The rest of these drill indicated showings are actually drilled to a depth of about 200 meters, and there's a good reason for that. This is the very first time in the 60-year-old history of this large property that has only one owner, and that's Cartier. So on the next slide, what I'll show you is what we published this week, and you'll get a sense of where we're going. So this week we published an audit, basically, of the last year's work. When we acquired the 03 ground, keep in mind, we published a consolidated fourth resource estimate, because right off to the west, there was the West Nordo deposit in our ground. So we had to produce a consolidated resource estimate. We also produced that PEA that I talked about. We launched a 25,000 meter drill program. But what we did not mention is that we initiated a thorough audit of the 800 diamond drill holes that stretch over that 15-kilometer long strike. And what we did is we took the geological features, filters that we had discovered were beneficial to finding more gold at Chimo, namely alteration, mineralization, and structure, and we applied that to every single diamond drill hole that we saw in the historic drill hole database. And we identified from that about 11 new targets. And some of them, as you can see in the top left-hand corner, bluegrass, are returning grades of 85 grams per ton over, almost 5 meters. And then further to the east, you have the East Nordo deposit that has 63 or 65 grams per ton over 2 to 3 meters. So at this point, we have the recommendations that stem from the PEA work in and around the shaft area, which are continued drilling to get it to 5 million ounces at depth, further engineering, metallurgical, and ore sorting tests, as well as launching environmental permitting. But we also have developed a regional program. So we're more ready than ever to cover all the bases going forward on this project. So basically, it's quite simple. We've got mineralization that has very good behavior. We're currently tracking at about $8.50 per ounce discovered. For the entire 5-year period, we drilled 80,000 meters, and again, 4 resource estimates of PEA. And with the amount of money invested, we're confident that the rest of the exploration will continue to generate those ounces at that low cost. So the key financial investment highlights for our company: we've delivered a positive preliminary economic report on the project, and it continue to have some upside improvements that we can do to it by further drilling. We have a very, very large land package with a significant resource expansion potential, as I think I've just demonstrated. And last but not least, we're in a very mining-friendly jurisdiction where there's access to qualified workforce and solid infrastructure. And then finally, we have some very solid shareholders, as I mentioned, Agnico Eagle, O3 Mining, the Quebec sovereign funds, myself and the board, just under 40%. And then we also have a group of about 6 very rich shareholders that own collectively 22%. We currently have $2.5 million in the bank. The markets are not very good, so it allows us to make sure that we do not accept delinquent offers or bids. And we have a very low burn rate, so we're able to survive this current market storm. I always leave the shareholders and audience on this. That's a picture of high-grade ore taken from underground level 17 at the Chimo mine. It generally constitutes about 25% of what is being mined at Chimo. So for us, when we saw things at Bluegrass, very high grades at Bluegrass and at East Nordo, it was a reminder that we could essentially repeat the 3 million or 2.5 million ounces that we have at Chimo at least 3 to 4 times. So we're not talking about a mine that's going to go back into production, but we're truly hoping that we're seeing an emerging mining camp east of Val-d'Or. And that's about it.
Any questions?
Either I was extremely clear or extremely confusing for you guys.
You said you had 2 million on the bank now?
Yeah.
Is that enough to cover the whole next year?
Yeah, well, it's more than enough to work on things to keep moving Chimo forward. We're definitely not going to be continue drilling or doing the high expensive work. Obviously, with the PEA, we have the ticket to knock on doors and attract potential buyers or M&A partners and joint venture partners to keep moving this thing forward. At these price levels, it's not anticipated that we dilute the shareholders. I think we've done our homework. We've delivered the value on the project. It's been recognized by the corporate world. It's been ignored by the market, and that's our job, is to turn that around.
So you expect to take over, or you expect to take over, or combine the business with some other partners?
We're working on specifically alternatives, non-dilutive alternatives, and typically in a better market, yes, we would expect to get offers for this thing to move it forward. At these price levels, obviously, we're not going to sell it at a discount. We're not going to give it away, and we have a protective moat, with 2 large shareholders that would prevent any hostile or delinquent bid on Cartier.
I assume that is poultry and illegal.
Yeah.
Okay, and is the area you are operating in easily accessible, or do you have to fly in with helicopter?
It is, if we go back to that slide, I can't go back to it, but if we go back to the slide where the property is shown, it's year-round access, 12 months out of the year. There's a 25 kilovolt power line that goes right, there you go, sorry. See those little white lines? Those are all, we drive right up to the mineralized zones. So, and it's about a 35-minute drive from downtown Val-d'Or, where I live. So it's not remote.
But you have snow over there.
Yes, there is about a foot of snow right now. But actually, that's also very good, because there's some parts there that are wetland. And there's some areas out there that you prefer to drill in the winter when everything is frozen. So we have the best of both worlds.
Can you remind us what the, electricity is a big cost in most parts of the world. Can you remind us what your cost is per kilowatt in this part of the world?
It is, I don't want to insult anybody here, it's 6 cents per kilowatt hour. Canadian. So that's about, yeah. And the corporate rate is 3 cents.
But you know that can change quickly, we discovered in the Netherlands.
Yes, but that's Netherlands. Quebec, we have electricity coming out our ears.
Yeah, but they're always WhatsApp group, so be aware.
Yeah. No, we in Quebec, we're very, very fortunate to have the James Bay hydroelectricity. We actually buy and sell back electricity to New York, Maine, New Hampshire. So and for us, it's actually has a tremendous impact on upfront costs developing a mine. It's a very good point, sir. Thanks.
Last week you have an announcement. You have a management change in the company. Yeah. How many shares he hold in the end?
He has about 1 million shares. He's a long-term shareholder. He's a geologist. He has indicated that he's not going to hit the market with that, so I would not be worried.
Okay. And how many people in salary?
We have 4 salaried employees right now. Our burn rate is about 60 to 70 grand per month. So we have more than enough in the bank to weather the storm, so to speak.
Thanks.
No problem.
Another 30 seconds. I can ask a quick
Yeah.
question about the, you already have a shaft. Like, how much would it cost to reproduce that?
Currently, with the cost, it would probably cost about $150 million to sink that shaft. We have a shaft that goes down to 920 meters depth. It's a 3-compartment shaft. The first thing we ever did before we even started drilling on this thing was to have an engineering firm confirm that shaft is pristine and can be reaccessed. And we could evacuate from that shaft up to 5,000 tons per day without any major refurbishment. But it could actually go up to 10,000 tons per day, and that would require some extra work, securing the metal guides to the side of the shaft and so on and so forth. So, yeah, that's a good question.
Okay, well, we're out of time now.
Yep.
Thanks, Philippe.
Thank you.